Welcome back. You're still tuned into Midcap Radar. Suryoday Small Finance Bank, that is the next management of the show, reported a sequentially weak quarter. Ramachandran, MD and CEO, MD and CEO of Suryoday Small Finance Bank is joining in now. Mr. Ramachandran, good afternoon. Thank you so much for joining in today. Provisions were high in this quarter while operating profits declined on a quarter-on-quarter basis. So wanted to understand, how do you see provisions going ahead and what is the guidance on credit costs for second half of FY25?
Yeah, good afternoon. Yes, there was a spike in terms of the provision that we made because of the microfinance challenging environment which we had in Q2, which seems to be stabilizing as we speak in terms of September as well as in terms of October. It was higher by 16 crores. Our income was lower because of the PSLC income, which is seasonal and happens in the first quarter. So these had an impact. And what we really see is in terms of tapering off in terms of credit cost, closer to probably, we'll have the same as we had in Q2 for Q3 almost, but Q4 should be much better as we see improvement, specifically in the microfinance segment, stabilizing.
So Ramachandran, clearly, like other lenders, you too have seen the pain, from that particular space, the MFI space. Provisions have spiked up. Outlook on provisions going forward, and also, at the start of the year, you had guided for an advances growth in the range of 30 to 35% and deposit growth in the range of 40 to 45%. Where are you tweaking that guidance to?
We are still on track in terms of deposit guidance of closer to around 40%. In terms of asset, as we speak, even if we continue the current momentum, we'll be closer to around 27, 28%. So inching towards the lower end of the guidance is where we are. And as far as the slippages are concerned, our entire inclusive finance portfolio, around 98% of it, is covered under CGFMU, which we started from the financial year FY23. So our net NPA is 70 crores, but the claims under CGFMU, which is eligible, which we'll get in the Q1 of next year, is approximately around 140 crores. So it's much more than the net NPA we are carrying. So there is a cyclicality in microfinance industry which happens. The reasons could be varied. But we did really see that happening, and the CGFMU is a good cover, specifically for encouraging micro entrepreneurs, and our entire IF portfolio is covered under that.
Okay, so let's talk about the unsecured loans part as well. Usually they are not recoverable. So what were the write-offs this quarter, and how do you think that would impact the different ratios going forward?
So we're still on track in terms of GNPA less than 3%. We're currently around 2.9, probably maintain that a little lower towards the end of the year. We do not see the slippages increasing in the microfinance sector. Q2 was really, really challenging across the board, across the states. It was not one or two specific states. Some states were more deeply impacted, probably in the northern states, which we are not present. But even among the states which we are present, Gujarat did see a substantial increase in slippages, which we didn't ever see it in the past couple of years. But we see that kind of 127, 130 crores. We would see that almost at the same range for Q3 and taper off quite substantially with Q4.
Mr. Ramachandran, once again, just want a few numbers from you. In terms of NIMs, you had guided in the range of 9.5 to 9.7%. GNPA, you had targeted to keep it less than 2.5%. ROAs were expected to be in the range of 2.2 to 2.3%. Post Q2, where are you tweaking these numbers to? And also, have collections improved Q3 onwards in the MFI space?
So we are in the first month of Q3, but what we see in the first 25 days, there is an improvement. There is an improvement. For instance, our current bucket collection efficiency used to be at 99.5, tapered off month on month for the last 6 months to closer to around 97.5 in September. But the same 97.5 was also in August, so the deterioration stopped in the month of September. As we speak, we really see probably 100 basis points increase for the month of November. And if it were to stabilize and improve a little higher, because the slippages which has to happen, probably has happened in the first 6 months, we will not see a similar slippage for customers who have managed through all these challenges. So hopefully the slippage will come down. On the guidance front, we are likely to be towards the lower end of all the guidances that we are given, except for probably deposits, which will be probably in the same range as 40 to 45%.
Two more numbers, cost to income, you had guided in the range of 57 to 58%. You've mentioned in your PPT that, you are expecting ROEs to be impacted. Earlier range was 14 to 16%. So where does that come down to? Is it at the lower end?
In terms of our ROE, will be closer to around 2%. But this is without taking into consideration the refund the reimbursement that we'll get under CGFMU, which we are not accounting while we are accounting for the expenses. Closer to 17 crores is what we paid in Q2, which is towards the CGFMU insurance coverage. But the benefit of that will flow for us only in the Q1. So around 2% is where we are. Likely that the return on equity will be closer to around 13.5%, 14%.
All right. Okay. Thank you so much, sir, for joining in today and giving us the details of what went by in the quarter gone by and, most importantly, the outlook going forward. With that, we'll do one thing. We'll take your leave on this edition of Midcap Radar. Stay tuned. Closing bell when we return.